Hi, Warriors. Second day of the doubleheader, the Consumer Pain Index. Maybe it'll be like yesterday and pain is subsiding. We'll see. Hi, AJ, Sinatra, Brand. How are you? Mike, Marcus, AJ, Ryan, my trading warrior brother, and Blake and Louise. Everyone seems to be doing okay. Well, let's see what happens in 30 minutes. I'd like to start off with a tip of the hat to Blake. Here it was yesterday. He prepped everyone for the number, and he was talking about fading dollar strength and concentrating on the euro. It's buying the euro after the release. Who followed Blake and did okay on that? Give me a why. Mike did. There's some whys. Okay. All right. Well, can you imagine that happening more than once a day? Not just in face, but also you multiply it with Ryan and K-Man and the rest of the crew in our trading room. So I would recommend you peel off a few pips and become part of the community on that trade. There you go. There's a testimonial from Brand. Okay, why don't I start off with Ryan? How you doing today, buddy?
Yeah, morning, mate. I'm good. How are you?
Pretty good. Yen taking a decent knock. Maybe it was along with yields dropping yesterday, or is there some commentary coming out of Japan on this
No,
move?
there's not been any commentary that I've seen. It's been a
Okay.
bit quiet. Yeah, I think this is probably just a bit of pre-CPI nerves.
Okay.
The dollar yen have been sort of bucking the trend of dollar weakness that we've
It
seen
has.
elsewhere, but that's continued this morning, and I think it's just it's finally catching the cold of what we've
Okay.
seen.
All right. So Blake also pointed out, I don't have the fibs up here, that we were around 61.8 back from the big decline yesterday. Do you look to trade it maybe back down towards 54 or so after the number? And what are your expectations for this number? Do you think it's going to be benign or surprise and be a little hotter? Yesterday, you made a great comment when it came out, Ryan. Everyone was saying, wow, that's hot. And you said it was warm.
Yeah,
So you almost sound like, what was that fairy tale about the
the
porridge?
porridge. Three
Yeah.
bears, Goldilocks and the three
You
bears.
have porridge? You have porridge for breakfast over there? I've
Not for a
never.
long while. We have it a lot, but I don't eat, people have it with
What
salt.
is it? What is porridge? I've
Oats.
never had it. Huh?
It's oats and
Oh,
stuff.
it's
Oats
okay.
flakes. Yeah,
Okay,
makes
so
like a gruel.
part of the breakfast bull market in the grains.
Yeah.
Um, all right. We took a breather just to keep you guys up to date with the grains. I think you have to still buy the break in this stuff. Here's wheat's back up today. So, this has been really well behaved. Talked about it a few weeks ago, even bar charts coming up. Beans, uh, you know, I'd still buy breaks if offered at 1180. And here's corn, still looking good, a little divergence, but grains, down the road, I don't care what today's number is. This stuff, and I don't have oats up, but I surmise they're rallying too. Uh, these are going to really play into problems with future inflation because these have been the most well behaved over the last 2 years since the invasion. They've been down for 2 years. So they've been contributing to um, less inflation over the last 2 years. And if these are turning, this stuff is in everything. So build your silos. You have room on your property. Blake can't do it because everything would be set on fire in the summer. The silo. which we're looking at coming up here.
Oh
It
man,
starts again, huh, Blake?
I'm bracing for it. I was actually sitting poolside,
Yeah,
after I went to the gym yesterday, and I'm just sitting there going, "Oh boy, it's going to be 20 degrees hotter than it is right now in just about a couple of weeks." And I'm just
yeah.
sitting there melting, and I'm like thinking, "Oh my God, this is going to be
Here
a
we
rough
go
one."
again. Here we go again.
Here we go
Uh,
again.
Here we go again. Another 4 or 5 months of you know, kind of having to be inside most of the time. So
Yeah.
where's your head? Where's your head at today, Blake? Uh, I don't think if we get a kind of a warm number that I would fade it this time, but that was a great trade yesterday.
Well,
Nice
thanks.
analysis.
Thank you. I mean, I scaled back some of my dollar shorts actually last night in Asia, not too far away from where we're at right now. I started taking some of it off. Here's the thing. It's kind of like, well, yesterday, Ryan said it was warm. It was really the data was, the headline was hot. It's just
Yeah,
the revisions were lower. And so the revisions from the
right.
previous month, it's kind of like the jobs data that we keep getting. Think about, a political tinfoil hat point of view. We get good jobs data, right? And
Yeah,
but then we keep revising down the previous month because no one's going to see that. But the headline number everybody's going to make news about. It's going to be on your nighttime news, and people will be talking about, but
right.
they don't discuss the revision so much. So today's data, we gotta be watching it because a lot of people are expecting the CPI to continue to come off. When core CPI is expected to come in at 3.6% versus 3.8 on the previous print, um, that's in month over month 0.3% versus 0.4% last month. Those that data is supposed to weaken, and then we're going to obviously have to look at revisions and see what is being revised as well, because obviously revisions kind of caught people with their pants
Yeah.
down yesterday. So I'm looking for continued dollar weakness. I am looking, the dollar is actually starting to take off across the board. I'll take over the charts here in just a minute. I'm sure you,
Let me just bring
yeah,
up
go
one
ahead.
counter scenario
Yep, sure thing.
that if it's hot, okay, and a lot of people are expecting, a softer number. If they're surprised, I wouldn't be surprised since I talked about the inside week last week. Now we have taken out last week's lows. We're still holding these lows from the prior week. But I'm thinking here, Blake, that if we get a hot number, that the dollar puts in a higher low compared to this here. And this was 120. And we get 120 from around these levels, that gives us 106. And if that happened, I'm a seller all over the place. I'm just saying that's a possibility on a hot number that we don't make new highs, but we get something similar to this to sell into.
Yeah,
That's it.
and we can't just assume the dollar is going to get rolled over here. I mean, I look at the euro, and the way I'm planning it right now is the euro is heading back to 110, excuse me. That's what
Yeah.
I think is happening. But the CPI data could completely upend that idea. I mean, it
I
is.
mean, the daily looks great, right? Look, it cracked this moving average.
Yeah, I mean,
Looks great.
well, let me just show you a couple of
Go
things that
ahead.
have
Yeah.
developed, and it's just I think that's really important. Ryan made a great point in the ForexAnalytix chat room. If you're not in the ForexAnalytix chat room, he also reminded all of us, and here we are right here. And just if you guys don't know what this looks like, this is a conversation we're having about daily pivots and trading view. Thank you very much, Dominic, for bringing up that conversation. Ryan, earlier this morning, this is a couple hours ago, Ryan said, "Hey, just don't forget that we have retail sales out this morning." That's
Oh,
another big component because
oh,
Ryan, I mean, I I hear it all the time here, that consumers pocketbooks are stretched. Credit
Yeah.
card delinquencies are rising. Loans, auto loans are, people are Googling at all-time rates. How do I return my car? I mean,
Yeah.
how's the consumer dealing with this environment? It's important, right, Ryan?
Yeah, very much so. We had a really crappy turn of the year. I think retail sales in January was a big negative. It's crept back up since, but yeah, it's another metric. I think just to take the two data points together, obviously CPI is very important. I think retail is only important if there's a big variation in number. If it's in or around expectations, then you can probably ignore that pretty quickly and focus on the CPI. But if it's a shocker, like -1% retail sales, and CPI comes in, as expected or a little bit softer, then you're probably going to get the dollar, really getting a spanking. Conversely, if retail sales are, gangbusters and CPI misses, you're probably going to go with CPI still, but it might be to a lesser extent because it's a bit of a counter. So the washing machine could be on for this one.
As K-Man likes to say, the saloon doors. So it might be swinging. And matter of fact, I thought K-Man would be here today. I know was he on the Flow Show this morning?
No, he's back tomorrow.
Oh, okay. I thought he said he's going to pop in for CPI. Maybe he is. I don't know. I thought he was going to be back today, but that's all right. Okay, cool. But yeah, as he likes to say, the saloon doors might be swinging today. So just be a little careful. But Dale, this is what I just want to show you a couple key developments that I'm seeing in FX. It's so yeah, the euro's above the 200 DMA. Now, this trend line is the one that I think I mentioned. I'm sure I mentioned here. I know I mentioned it on the Morning Edge, which is the ForexAnalytix show for subscribers. Mark Chandler a couple weeks ago, he emailed me when we hit or text me actually when we hit this level. And he's like, "Did you see that?" And I'm like, "Yeah, it was a big resistance. Big trend line. We broke that at the end of the week, and now." What we're doing is we're breaking all sorts of trend lines. So you can see where we're at right now, which is a 618 retracement. That to me is uber important because this is going to tell us today if the euro let's just for all intents and purposes, let's say we close above 108.50. Yes, the target for the intermediate or intraday, the flag target takes us to 109. But I think that a close above 108.50 opens the door for 110. And 110 is going to be a big deal because this theoretically we can be in a longer term triangle, right? That looks just like this. And 110 being up here. It's not like it's not like the euro hasn't been to 110. We're not going to see like some uncharted territory never before seen in the world. No, it's just a big consolidation in the dollar. It's the euro. You look at the euro, it hasn't gone anywhere really since middle of last year, since summer of last year. 110 is not a stretch for the euro, and based on current expectations that that the Fed might actually have to or might actually lower rates if inflation continues to drop. That's realistic. I mean, we're going to see interest rate expectations shift again. So 110 seems doable on a really weak number. And let's say retail sales are weak as well, as Ryan points out how important they are. Yeah, I see that as being possible. Again, we're above the 200 DMA. That's super important. Look at the cable. Cable's squeezing people out, like literally threatening to break out here. Right, Ryan? I mean, look at sterling. I mean, it's doing the unthinkable, right? Like it is. So you got sterling, you got the euro. Look at the Aussie. We have a bullish pennant. We start taking out the 618 retracement and then this descending trend line. And then, we're going to be arguing why the Aussie is breaking out. I mean, obviously we can go to copper, we can look at China, we can do all sorts of things, but look at the Aussie dollar. If we start taking out, let's just call it 67 cents. That's a big breakout, right?
Yeah.
Kiwi, Yeah, Kiwi's above the 200 DMA. This is my blog from 2 days ago, the chart of the day. But you can see the setup here. Kiwi's got distance to go. Dollar CAD, we've been yammering on about it. Dale, you had a great short, right here last week. But look, we're at 136. We break through 136, and what happens to the dollar CAD? I mean, there's a lot of things happening in the dollar index that, you have some weak data that happens. Now, it's not just the dollar though. I mean, we have weak CPI, and I'm in the camp that we will squeeze to all-time highs. We can possibly get a blow off top here. I mean, Dale, I think let me stop really quick. I think everybody, myself included, believed that a top was in and we're going to create some sort of lower high. But let's not ignore, and I just sent out an update on ForexAnalytix. Let's not ignore that we're just grinding higher. And if you're short, think about who's trading against you if you're long. Anybody who's short right now, they have nowhere to get out. They've had no opportunities to cover shorts. It just, every time they wake up in the morning, we're 10 ticks higher, and they're like, oh my God. So it's not letting longs in the market. It's not letting shorts cover shorts. That is a definition of a bull market that could really squeeze. So if we have, as you pointed out, Dale, if the porridge is not, it's Goldilocks, it's not too hot, not too cold, it's just right. I mean, S&P could be trading to all-time highs, as all these European markets. And
just one caveat. When I had Katie on last week, I said, does 52.20 mean anything to you? Because she was thinking there's one more dip too before we melt up. And she said, watch 52.53, and that's a high so far.
That was, yeah. I mean, within it's
I don't know what you saw there. I don't know what she saw there, but she threw out 50. That's not just like 50, around 52.50-ish. I mean, she threw 52.53.
So maybe she was looking at this channel, like, right. I mean, because the channel's really kind of capped us, right? I mean, but good. Katie's a good technician. I mean, we gotta
so unemotional about the markets. That's what makes her great.
She's very pragmatic. Yeah, exactly. All right. One other thing too. Look at gold. Now, gold just, we just hit a high. Well, obviously an hourly high. I mean, that's up. But think about what happens if we break above that. Weak CPI, we break above that. We're trading at, new highs or all-time highs probably. Silver looks pretty constructive. I mean, copper's continuing to break out. Now we have seen a bit of a reversal, but look at what, people got a little. I mean, look at the RSI intraday.
It's not in pennies anymore.
No, I mean, we think about all the sellers that were at $5. We were just at $2, not too far, not too long ago, Yeah, I mean, it's like we were trading down here in the twos, back in, I guess, post-COVID, and we've doubled. I mean, copper's gone crazy. So, but anyway, I think there's a lot of big developments. US dollar Norwegian krona broke down today. Finally, I wish I was still short this one. I was short from way up here at 11.14 and covered it last week, but this thing looks like it could break down. And I don't know, guys. I sit here and look at the dollar. I'm with you, Dale. As far as I'd be a little careful playing the dollar the same way we played it yesterday, on a dip. If or let's just say if the if the dollar rallies today following a hot number, it'd have to be really, really hot for me not to do it. But I'm if it comes in anything around expectations or below expectations, it looks like the euro's trying to make its way back to 110 in my opinion. So
what about yen? You called that at 61.8 yesterday.
Actually, we came really close within striking distance. And this is following, and I'm glad you brought this up because I did want to talk about yields because yields have come off. And it's like finally we've been sitting here watching yields. Here, let me pull it up really quick.
Definitely.
We've been watching yields come down, and you're like, oh, okay, the dollar yen's obviously not a yield trade right now, but
Right.
but it took literally the dollar yen or the yields to actually break, like to show us, to prove to us that we're breaking down, for the dollar yen to actually take notice. But what's really interesting about this, and I want to point out just a few things, and you guys can, I'll do it via ForexAnalytix so you guys can all see this. So, you look at basic technical analysis of all of, these pairs. You got the pound yen. We just hit the 618 retracement. You got the euro yen, up at channel resistance. We just basically pivoted off that this morning. The Aussie yen, we hit the 78% retracement at 104. 104 is, everybody's going to trade against that 104 level now. That 104 level is going to be huge now. Canadian yen, Canadian yen's going to try to forge out a lower high, and reject the 115, the 618 retracement. And also the Kiwi yen, if you guys haven't seen this, we actually had to go neutral on this morning via ForexAnalytix because we just hit the channel resistance. And remember, these are the previous. I'll take you over to the New Zealand yen here so you can see how important these highs are, because this is the previous highs from way back in 2014. We're back at it and we're challenging them. So, yeah, you look at these levels that we're testing here, and you got to be really, really careful trading these to the upside. Now, I think there's going to be two-way action in these yen pairs from here on out, but the dollar yen will definitely have a negative impact on any miss today. What's really interesting, little position squaring ahead of the data. You're seeing the euro, just continue to squeeze higher into new highs. Aussie dollar is giving some back right now, so this is a little bit of risk off when you see the euro Aussie perk up a little bit. And it's not just the euro Aussie; it's the dollar mex that's actually looking a little bit bid right now too. So a little bit of risk aversion seeping into the market right now, and you can see the S&P is S&P's on its lows of the session, but that could change dramatically in about 8 minutes. Sounds like we got Grega Horvat here.
Yeah.
Grega, good morning. Grega does our Elliott Wave updates for ForexAnalytix for all the 30 instruments here.
Hey,
Grega, what are you seeing today?
well, as I was in Flow Show earlier, so maybe if someone is interested in
I was
more,
sleeping. So was Dale.
yeah, just wanted to bring on that if someone wants to make a full perspective, watch the recording. But as we discussed, I think that the US yields have seen an important top. I think that we have 5 waves down from, or I should say maybe on the US notes, if you will open the chart.
Yep.
I think that we bottomed and we are just breaking this trend line of resistance. So I think that we are headed higher, and this could possibly mean that dollar will stay bearish or dollar index in a very big triangle consolidation. But definitely, I'm expecting more strength on commodity currencies. But think that we should be aware of some pullbacks. Nothing moves in straight line. The only question is if today's CPI print will just cause more acceleration straight from here on the US yields, or maybe will trigger some rally in the near term. But even if dollar would rally with US yields after the data, I think that eventually after some pullbacks, again, dollar will be sold further. So I'm definitely looking for more dollar weakness across the board.
Okay.
Oh, sorry, I was on mute. So you would be in line with the euro potentially going towards 110 again.
I'm definitely bullish on the euro. But if you watch, open this for our chart, yes, or daily. Yeah, I'm thinking about more upside. We just broke that trend line that I think you showed earlier as well in your charts.
Yeah, it's right here.
I think that's a pretty interesting recovery going on. But as you can see, there can be some setbacks before maybe pushing prices even higher. I'm not sure if the euro is the right choice to be long against the US dollar. We know what are most likely the ECB going to do, maybe even lowering rates before summer. So I think that maybe some other currencies are much more attractive at this stage.
Okay, like you look at something like maybe the Aussie might actually be more, especially if we break, like, look at all this like resistance. I know we pointed it out on the Aussie chart just a bit ago, but we break above that, 66.50, or excuse me, 67 cents. It's probably pretty bullish, I would assume. So
yeah.
All right. Thanks, Greg. How do you feel about precious metals? I know we have a lot of gold traders and silver traders around here. You have any views on gold? Let me pull it up really quick.
Yeah, I think that we are consolidating there on gold. I think that we are going to see more upside, but gold silver ratio is currently trading quite heavily for the last few days. So
Yeah.
I'm thinking that silver is much more attractive.
Oh.
I would be looking rather to silver rather than gold in the next, let's say, in the next week or two. If we get some kind of a dip, I think that silver has a very nice support around 27, around 28 is the short-term first level. But definitely we'll be expecting more upside. Just not sure if we'll get this setback anytime soon.
Awesome. Awesome. All right. Well, thanks, Greg. Hey, I appreciate you popping in on both shows today. And remember, if you guys aren't listening to the Flow show, when a lot of us in the United States are sleeping, at least those of us on the West Coast with Dale and myself, make sure you go to our, you can go right to our website where it says webinars. Click on the Flow show. You can listen to Ryan, K-Man, and Grega obviously pops in sometimes like today as well. So I'm gonna get us ready for today's trading for today's CPI data. So Grega, thank you very much. Ryan, what are you looking at going into today's data as I get set up here?
Exactly the same as yesterday. Same type of thing. Watch for the numbers, see how big the variation is before judging the moves. But I'm more favour selling a dollar rally than buying a dip at the moment. So I'm still long my cable. I would keep an eye on that. That's doing nicely above 126. And stocks, I said yesterday, look around at 52s. I didn't look at it quick enough to get in. But that got to what 96s before it bounced. So again, that's another one to look at if you want to take FX out the equation. So a dip in stocks again back maybe to that 52 level.
Okay, so if we can get a dip down to 5,200, now that's 50 S&P points away. It seems like that's an eternity, and I think anybody who is short stocks would be so happy if we saw that again, right? It's like, oh my God, I was short, and please let me see 5,200. But yeah, I mean that was the move yesterday, and you can see where the S&P is at right now.
Yeah, you might be looking at 52.20s for the similar type of move.
Okay. All right. Just keep in mind, guys, we're also looking at retail sales. You got S&P over here to the right. We got yields right in the middle. I'm going to keep the dollar index just, hovering here on the left. Dale, any last minute thoughts before the data comes out here?
No, looking to react to the reaction. So, I've noticed VIX is up again today. So let's see if Katie nailed the number.
Yeah, let's see.
And
remember, a breakout would
new
be
highs. Yeah.
Yeah. All right.
Well, let's see
if we can forge a lower high. I mean, that would be a big deal. I mean, it would be if the data comes in, let's say it comes in a little hot, and we start actually rolling over in the S&Ps. I mean, we would be theoretically creating a longer term lower high if it holds this week.
Yeah.
But we'll see. I mean, and we can't forget that the inflation data has been strong globally the last month. So generally speaking, so everybody should, have fairly high expectations with today's data. There's retail sales. So keep in mind, this is your data flash that you see right here. it is included with ForexAnalytix, and we should be able to see the data coming out as it's being released. Ryan, let me know if you see something ahead of us.
Closes under 105 Dixie, and I say closes is very bearish.
Okay. Yeah. With you. All right, here we go. Heads up, everybody.
Inline CPI, retail sales flat. So
wow. Oh, dollar's getting absolutely wrecked right now.
Yeah.
So
S&Ps are exploding. There's your blow off. We're almost at new highs.
Yep, we are. Yep, look, that looks like that S&P did not matter much. Wow. I mean, the euro just ripping. Now it's like I'm trying to like how do I get into more dollars? That's shorts. That's all I'm thinking right at the moment. Like how do I scale into to more? And it's tough because you got to now chase it. I still have some fairly sizable positions, but wish I had more right at this moment. Look at the S&P. Wow. Wow, wow, wow. So Ryan, why the big response here, do you think?
Same old. Any excuse to whack the dollar. It has confirmed CPI coming down a little bit. It's still sticky. It's been up here for 6 months. Well, longer. This will be 11 months now, above 3%. And now with the retail sales a little bit softer, it's sticky CPI, but the market wants to whack that dollar, and it did it yesterday. It's doing it again today.
Yeah, we did hit the 50% retracement, longer term 50% retracement of this entire triangle. Just keep that in mind.
Ad is breaking down.
Yeah, there's a lot happening right now, and it's hard to actually chase. I want to chase, but I can't. It's like I can't like just start adding to positions right now, because I've already got positions. It's just like you can't add into the strength. I got to wait for a little bit of a pullback, which we might be getting one here shortly. So we'll see. I mean, it looks pretty good as far as it looks like the euro wants to continue to go here. Well, guys, that is a pretty big move, I must say. Any other last minute thoughts before we turn it over to Dale? Ryan?
No, sorry, mate. I'm just keeping on cable.
We're trying to trade over here. I'm trying to figure out where I want to buy some more euro, to be honest. All right. Well, Dale, I'm going to let you take over. Those of us that are short some dollars, just remember try to buy pullbacks if we can get some more right here. So, all right, Dale, it's all yours, buddy.
All right. Thanks, Blake.
Thanks, everybody.
Thank you, guys. All right, JJ, welcome back to F.A.C.E. The inflation problem is over.
Well, right? That's great. That's great.
And are you popping any champagne corks here?
I'm an inventory trader, Coach. Good to see you.
Yeah,
good to hear you again.
Nice to have you back. So,
yeah.
So speaking about inventory, is there any inventory above the market right now?
Well, we've got a little.
Clean it all out.
We've got a little bit. I had a 52.82 target for this morning, and we blew past that. We're right back at near the all-time highs of that 53.30 split. I mean, contract adjusted. And once the inventory's underneath us, these futures markets are all spec, right? They're.
You want to share your screen, JJ, while we're talking?
Sure.
Yeah,
I'd love to. Oh, can't do it just yet.
Blake, can you unshare?
Oh, sorry, my bad. Okay, here we go. Sorry,
no worries.
Trading.
It's okay. All right.
Yeah, so I've got some zones and some levels here, and I'm I'm an old market profile guy.
Yeah.
So you could see the inventory is completely all under 52.55. That was a big level for me. Once we got over that, it's pretty much clear sailing. There's only coming from being I'm a distribution. I was a distribution trader, meaning that I would sell huge positions for insiders. So then I'd have to go clean out the market afterwards. So I know a little bit about overhanging inventory, and that's all the overhang we have now. So the other thing is everybody's been shorting the front side of this move, and that's been adding fuel to the fire. There's gaps that haven't been filled. There's single prints, which is a market profile. Here you've got single prints, the bottom of tonight's profile. The overnight is right where the shorts are trapped from yesterday, right when we took the high of 2 days ago, right? When you blew those stops, that's where the responsive bid was in the overnight. And you can look at that profile. It's big and fat. It only had one way to go. I took a little test short, stopped myself out before the data, and that told me, oh, the bid's in there strong. Yesterday, the same thing with data. We had a little flush down, and yesterday we flushed down. We came right into that 52.20 area, and that's right where we had single prints from the ninth, and there was a beautiful responsive bid. Because basically what happens on these liquidations with you got so many short positions in this market is that the shorts come running through the door like those Black Friday shoppers when they open the door at Walmart, they just they bum rush the security guard, right? And when lower prices come in, that it's really indicative of a market that's really, really short. The price action, I'm really hoping we get some liquidation one of these days because it'll give us better price action.
Okay. Yeah, it's hard to, so, if you weren't long, there's really
Yeah.
not much to do right here, is there?
I'll wait for a distribution balance because what they're going to do is now that they've got everybody jammed short under 52.80, they'll sit there and distribute at 52.96 to 53.04. So what we're going to do is I'll wait. They'll establish a little two-sided balance zone. Then I'll double it to the top and bottom, and I'll trade that and trade the rotations during the day. So
Okay.
that's how I trade. I wait for them
Yeah.
to take the goods to market. I don't try and get on the truck before it leaves the loading dock. Usually that's a risky trade. I'm pretty risk averse.
Yeah.
So yeah, and just sticking to one product works for me.
Okay.
Because you get
Yeah,
to
you
know the
get to
order
know
flow.
like the back of your hand.
Yeah, it's like dating one girl instead of dating four or five. You
Yeah.
know when she's upset, you know when she's in a good mood. You know
Yeah.
when to stay away and hide in the garage. Um,
Yeah. True,
hey,
buddy.
yeah, they're backfilling now,
Yeah.
right?
So where
They-
would you expect the backfilling to stop? Around prior
I'm
highs at 52.80 would be
Yeah,
logical?
I mean, if you take a quick look at our I've got a very simple just a 5-minute chart with volume profile on it. You can see here's the distribution. Here's that big chunk of volume, right? And it's all about cost basis, right? So this is the major cost basis one. This is some distribution. That's why we were going back and forth here. Now they'll rail it up, and as soon as we run out of buyers, they'll just backfill all the way down to that 76.80 level, right? But the problem is every time this market takes a little dip, people initiate short, and that really helps hold up the bid when we run.
Yeah.
This thing trades very much. I'd never thought I'd see the world's most respectable market trading like a rigged penny stock, but because the, you know, because the revenue model of US capital markets is, an asset gathering model as opposed to a commission-based revenue model, the way it used to be in the old days, people get paid to hold positions and, they just warehouse stock. That's why you look at Apple, it's got 16 billion in the float. A big day for Apple is over 100 million shares. There's you know, people buy that stock, they put it away. You could imagine the certificates probably have dust on them if they had certs.
Yeah. Yeah. Interesting. Do you think that the meme action we've had for the last couple of days, what do you think of that? I mean, it's like a
I
replay of what happened a few years ago.
definitely. What I think is that they've got aged paper. I don't know if you know a lot about 144 paper.
Yeah,
I
it's
know AM's.
restricted.
Yeah, when restricted paper comes due, it's usually time to pay someone to get the punters to come in, right? Because they got to
Yeah.
blow off more paper. AMC, didn't they just do a $3 raise on this thing?
I'm
Right. So
not
that's
sure.
yeah. So if you did a $3 raise, you crank the stock up to 14, sell it all the way down. hold it over 5 so people can hold it, that $5 penny stock rule, right? And look at
Yeah.
the dollar volume. I mean, yesterday these stocks traded, what is it? GME traded over $10 billion in dollar volume. It's traded almost $1 billion this morning pre-open, right? AMC's traded $338 million pre-open. The way I look at these companies is as a liquidating trader for investors, how much of that dollar volume can I capture? 30%, 40% for the insiders?
Yeah.
And that's how big money is made. The funds write convertible debentures, and they get a nice chop to current market price. Then, of course, some knucklehead comes out on Twitter and says, buy the stock and the thing runs. But now when the street takes a stock, it's just amazing the kind of dollar volumes, things that we could only dream of in the 90s and 2000. I mean, you'd never think of some company that nobody ever knew of, trading $10 billion worth of paper in a day. And
No.
if you're 30% of that, that's a good day, you know.
Yeah. Yeah.
If you're, even 30%
It's a
of what
good year.
it's a good year, right?
Yeah.
So, and then the nice thing is they use the shorts to prop the thing up. I don't know how these retail guys trade this thing because they halt, they release, they halt, they release. That's too much for me. I wouldn't trade them as a retail guy, but I definitely love to make a market in these things, or to be the executing trader for the insiders. That would be a wonderful day. You just filling bids all day.
Yeah.
And when you have cheap paper, you never saw a bid you didn't like.
Yeah. Interesting.
Yeah.
So there's GameStop, AMC, same story, right?
Yeah, same story. I mean, they just keep coming for it. Look at 338,000 trades pre-market. There is, so much retail participation in these deals now. It's wonderful. I might start doing deals again. I saw I saw a 30-cent stock trade $300 million in dollar volume yesterday. And all the news releases were NASDAQ delisting and failure to file.
Wow.
So
Yeah. I mean, these are games.
this is, I mean, it's a beautiful
Yeah.
game if you're long cheap paper. If you can get,
Okay.
if you can get stock at a discount, that's one thing I learned. I mean, I've never actually ever paid for stock in my life because I always work for these companies and they give me
Yeah.
S8 stock, or the insiders pay me after, I help liquidate their stock and create markets. So I've never actually had to pay for stock. It's one of the rules I learned in 1990, from my first boss. And but it's, as a retail person, it's hard because they see that price going up, and this is just to get everybody all excited, and then you just sell right into it. And it's just amazing. I'm blown away how much retail participation is coming into these things. Looks like the ES is.
Richard, Brand just said, watch the legislators mess with this retail
Well,
guys.
well, yeah. I mean,
What can they do though? What can they do?
what can they do? As long, here's the thing about the Exchange Act of 1933. Um, there's something called 17B. If you disclose that you're going to sell your stock into the market, and you've paid for your stock, you disclose you're going to sell your stock, even if you disclose you've paid someone to pump the stock for you, you're okay. Disclosure is everything in the US, and that's the beautiful thing about the US capital markets. As long as
Okay.
you disclose, you can do anything you want. Now, the retail person off the street, they're trading off cell phones, their trades get frozen, brokerage firms go down, so it's harder for them, of course, right? I like trading. That's why I like futures, because there's no dilution. You don't have somebody with, you know, a pipe or a convertible debenture dumping stock into a market when you're trying to buy it. Um, you know, it's that's why I kind of gravitated to the futures after I was in stocks for so many years. ES, by the way, seems to have found a 5288 bid, and looks like we're just going to
That's it.
distribute up here. Yeah.
Yeah. So that 80, that was the prior high. So
Yeah.
like we were
Yeah.
talking earlier,
Yeah.
85, I think, was the prior high, but close enough for government work, right?
Yeah,
So,
definitely. Yeah, it's been it's been a tough trading environment for retail in these futures markets because the ranges are so big and people try and catch these ranges. And so what I like to do is, I'll either trade this range or when they move it, and then I'll find a nice balance here and then trade the edges of that balance. Um, I I try and leave this alone, um, just because I'm sitting at home on a regular internet connection. I don't have the technology. The last time we had a Fed thing, everybody's screens froze up. So, I'll wait till the price action calms down. We put in a nice rotation, and that way you can hit the look below and fail. So when it looks below, comes back up, you take it up to the next level. And I trade for income. I don't trade for glory. So just trying to make my daily bread and live a peaceful
I love
life,
that. I
you know?
trade for income, not for glory.
Yeah,
That's
you know.
beautiful.
I'll leave that
Right.
to the young kids with the Red Bull.
Yeah. Like we used to be.
Yeah, like we used to be, right?
Yeah.
It's
Yeah.
when I was on the desk, we were all commission guys, and we'd be charging 5% commission, to promoters, and they'd get their stock for free, so they didn't care. And these young kids on the desk get maybe 300-400 grand a month in commissions they'd be making. And then I remember there was one brokerage firm that had just nothing but grinders. And these guys like wore the bargain basement sweaters, brown bagged their lunch to work, but they were always liquid. They just made their money every day for 15, 20 years. And anytime like one of the kids blew up and needed to borrow a couple of 100 grand, they went to these guys,
Yeah.
because
Yeah. Yeah.
they were always liquid.
Yeah. It's an interesting perspective that, you know, guys that have had careers for a long time were able to see. And we're kind of seeing it again in the more modern age. It's probably going on right now,
Oh yeah.
buddy. I mean, probably some, penny stock firms or some of those, who's probably getting hurt are the professional short sellers
Oh yeah, shorting
in the
is.
penny stocks.
Oh
That's all
yeah.
they do is,
Yeah.
because most of those deals would fail. They just
Yep.
come in and short the stock, and I think they were market makers too. But yeah,
Yeah, it's hard now shorting because the capital requirement, you got to get the borrow now. I mean, ever since Reg Show in 2005, they just sort of changed everything that made it very difficult for short sellers. And, the market's already, kind of made up for longs, right?
yeah,
And, hey, this guy's saying, isn't Grinders a dating app? That's hilarious. Um, you know, but
yeah,
everything's sort of rigged to hold, right? I mean,
yeah,
funds are getting paid 2 and 20, right? So,
right,
you manage $1 billion, you get 2% to not trade. Short selling is a tough game these days. It's a really tough game these days.
yeah,
And I don't like fighting the tape because you just end up getting run over. So I don't mind hit and run shorts. That's okay with me, but holding short positions and warehousing shorts is, oh, that's a era gone by.
yeah. Maybe that's why guys like trying to think of his name. He was famous for being a bear on China,
Oh,
and
Chanos.
yeah, Chanos.
Yeah.
His fund got wrecked.
Oh, geez, yeah.
Yeah,
Yeah, he lost
but
billions.
yeah,
The thing is that when there's no supply, you can't short. If the insiders have the stock locked up, how are you gonna get supply? You need a liquidating seller to short to push the price down. Otherwise, if there's no price competition, price doesn't go down. And people will just find that out even now. Look, I'm sure people hit that short here, and the late shorts are probably short under 92. They've realized that they're trapped. Now look how they're pushing price back
yeah,
up.
right.
You just see it in every single time frame. I don't mind shorting. I used to be a short seller. I was trained by John Fierro. Fierro brothers in the 90s. I mean, the guy used to wear a bulletproof vest to work. because he was such a hated short seller.
Wow.
But
Yeah.
all those guys are retired now, It's you might as well just go long.
Yeah. And the spreads.
Oh yeah. Yeah. Yeah, the spreads and the old days too, remember, if you were short a deal and there was no selling, you'd call up one of the block guys and have them spread a rumor that somebody was shopping a block at a discount, right? And then at least
Right.
people would short it and you could cover and save a little face. You know. But you can't do those things anymore, right?
Yeah.
So it's such a different game. Um, it's such a different game. And stock borrowing that's a business in itself, Rao. I don't even know what it costs now to put borrows on some of these deals, especially the hard to borrow ones, right?
Yeah.
And then they can yank that borrow back without any notice. And you've got to cover by end of day.
So you run a Discord room and
I do,
talk
sir.
about these things all day long. You want to talk about that a little bit? What you do, your
Sure.
business model?
Definitely. Yeah, I'm VWAP Trader One
X.
on X on Twitter,
Yeah.
and it's microefutures.com. And I'll
Okay.
pull up the website here.
Go ahead.
And what we do is we just try and train people so they can make a living. That's our whole thing. We've got a 7-day trial going now, so come drop by. It's free. Um, and we'll show you the business and we'll train you how to, work every day. Basically, it's just going to work every day like any other job. We've got a decent room. It's not one of those rooms where, people pound their chest and stuff like that. Try and help new people. I also do a course. I do a mentorship course where you pay one fee and then you've got me as a mentor for life. And that's been working. We've done 4 of those so far, and
Nice.
yeah. And so, people get my phone number and it's basically like I trade over your shoulder like, we would at a brokerage firm.
Okay.
Yeah.
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 It's important that people find the right guy to learn from.
Yeah. And
Yeah.
our room is like, when we mess up, it's like, okay, I blew that call. Right.
Yeah.
That's really important. Learning how to admit you're wrong is one of the most important things in this business, really quick.
And I don't know is important.
Yeah, I don't know is really good.
And it's
I
hard to
I
say, isn't it?
I
It used to be.
yeah, I never see because when I started on the trade desk, they said sit there, shut up, don't touch anything. And they, so they kind of beat that humility into you. Whereas nowadays, people don't want to admit they're wrong. Being wrong is okay. Being wrong and stubborn is really expensive. Just admit you're wrong or admit you don't know. The thing is, there's so much time and trading is a marathon. If you don't know today, you might see it, you might see the trade later in the afternoon. Um, just kind of chill out a little bit and wait and trade on your terms when you're set up. That's another thing. We teach really 2 basic setups where people can make a living and do that setup like 1,000 times and get really good at it before they start improvising. And the setups are based on common sense business, lack of supply or too much supply. And the risk is already structured into those trades. So, and then we teach you how to trade with the micro so you don't really hurt yourself when you're learning.
Right.
Otherwise, it can
Smart.
get really expensive. Everything is geared to being practical. Even this market profile stuff, it can get overly complicated and very, just it can get too much. And what I do is I just try and take that, combine it with a candle chart, which most people use, and then just try and make it really, really simple for people because the execution is the difficult part. It's a lifelong process, and just as soon as you get good, the market goes and changes.
Yeah.
And what worked one week doesn't work the next week, right? And so we just try and teach people how to deal with that. And then we try and have a bit of a laugh too, because a little bit of humor kind of takes the edge off. Because a lot of retail traders, they don't have support, they're sitting at home You know, it's not like you're on a trade desk where you have somebody, a risk manager, a compliance guy, owner of the firm, head trader. You have all those people kind of looking out for you when you're on a trade desk. And you don't have that in a home environment. So we try and help you learn how to be your own credit manager or your own compliance manager. You know, to think like you're in the business. And then, you know, sometimes when it's slow, we sit, you know, have a bit of a laugh instead of trying to push trades and give all our money to Citadel.
Yeah. Yeah, it's always refreshing talking to you, JJ, because
Uh,
you know, we really get you know, your history uh it shows every time you talk. It you know, really comes out that, you know, you lived it. You know, you didn't read about it, you lived it. So
yeah, I lived it. I lost 14 friends and had a quintuple bypass, so I paid my dues. You know,
yeah,
it's
yeah,
you know, it's an
you know,
ugly business, but we try and help people, you know, keep perspective. I guess that's one of the things. You know, it's and sometimes these markets, my God, I've never seen markets like this where there's just no selling.
me either.
You know, and they're
Yeah,
tough to trade because the more short they get, the more grindy and choppy the price action gets. And that's hard for people because retail people, they're sitting around, and not everybody can sit around for 10 hours a day watching a screen. You know, they got jobs, wives, kids, hockey practice,
yep.
you know, stuff like that. So it's a challenging trading environment. I think this year is going to be very challenging, and we really want to try and help support people and you know, keep them, you know,
Yeah, some of the Super Bowls have been talking 6,100. I even know a guy talking 7,000 S&Ps by the fall.
you know. And the other thing too is every time they roll the contract for over, it's like 60 points higher.
Yeah,
You know, so that you know, it's I could see 6,000. I 2 years ago, 3 years ago, we would have laughed.
yeah,
But the way
I
these
did.
markets trade, the
Yeah,
ranges, I mean, you get 100-point ranges now. So if you really don't watch your whiskers, you can get hurt really bad in these markets. And
yeah,
you know, it's okay. When institutions lose money, it's okay. They're big boys, but I hate seeing retail people, like people who work for their money. You know,
yeah.
I hate seeing them lose money unnecessarily. That just drives me nuts, and that's why I do what I do.
A man with a mission.
Yep.
JJ, follow him at VWAP Trader on
VWAP,
X.
yeah, VWAP Trader One.
One, yeah, don't
Yeah.
forget the one. And what's the website again? You have a
It's
website address?
micro. Yes, sir. It is microefutures.com. And thank you
Okay.
so much for having me. Here, I'll just show it again. Here we are. And yeah, drop by. We're having a
Yeah.
7-day free trial, so come and, you know, come and give me a hard time, you know. And
Yeah.
uh
Definitely a veteran,
yeah,
definitely a pro. So there you go. JJ,
thank you.
really appreciate you dropping in and sharing your, you know, life experience in the industry.
Thank you so much, Coach. Have a great day.
All
Thank you.
right. All right, JJ, I'll get a hold of you. We'll get back together later in the summer. Okay, buddy?
Definitely. Always.
Oh,
Anytime.
okay. All right. So my trading warrior brother, JJ, check him out. And you could join the team in about 17 minutes on the morning edge. That's a wrap of the doubleheader. It looks like, you know, the Bulls are getting what they wanted. We're getting this turn in rates at 78.6 level and the 10-year held. Dollar getting beat up. You know, this is just the beginning of a dollar bear market in my view. So there will be times to get on board. And remember, don't just count your pips, count your blessings. Adios. See you guys tomorrow. Thank you, Sinatra. See you.